5, and I'm going to be using this as a case study to show you guys some secrets. Now, the last time we had a Zoom call, I said before you trade, before you take an entry, you need to identify the overall structure of the market, right? So identifying the overall structure of the market first is important. The next thing you need to understand is, after identifying the structure of the market, having in mind, is it in an uptrend? Is it in a downtrend? The next thing you need to know is, where can you possibly take sniper entries? All right, so let me just use the normal trading view because of some illustrations I would like to use in showing you guys an example. Now, I am basically a swing trader in the sense that I like taking entries at good swing levels, all right, while still trading the trend. Now, due to more research and more knowledge, I've advanced from just trading in the trend. I can also trade against the trend. Example, the crash 1000 we took yesterday, on a lower time frame, it was having this, let's say on a 5 minute or 15-minute time frame, it was already creating some little or minor structures for an uptrend. Notwithstanding, you could see how we got the reversal, right? But that's not the focus. So first things first, as a trader, you need to understand the structure of the market. The structure of the market, I mean, are we in an uptrend? Are we in a downtrend? And we used an illustration the last time. Let me bring it out. Yes. We use this illustration, and so we say if the market is making wave-like structures towards the downside, now we can say this is an obvious downtrend. Why is this a downtrend? Because a downtrend is signified, or it's identified by the lows being taken out. What I mean by low is this: you start a journey from this point, and then you get to this point, and then all of a sudden something pushes you back up, and then you couldn't maintain the pace going forward. Rather, you decided to come down and then break this low. Now, remember, this low started from this point, got to this point, and then went upwards. And the moment you couldn't continue your pace upward, your village people had to bring you back down, thereby breaking this particular low that was first created. Now, every point of reversal towards the downside facing upward is a low structure that is being broken. And so the more, try muting your mic so that it's better, the more you keep on breaking lows, the more a downtrend is formed. So sorry about that. So in this case, let's start with how many lows can we identify. We can identify coming. All right, so you can identify this low. Okay, so sorry, I muted your mic so that we cannot hear ourselves. So we can identify this low. We can identify this. I know why I'm starting from this point, because I want us to have a basic foundation. All right, so This is how a downtrend simultaneously looks like, because these lows are broken by these new highs. So for a downtrend to be a downtrend, a new high has to break a previous low. This new high which we got here had to break this previous low, and so we can decide to mark it. We can say this is a lower low, the Charles Darwin theory on the concept of lower lows and lower high. Please, if you know this, still bear with me. I know why I'm doing this, because when we finally get to the strategy and concerning using, so this is a lower high. All right. So for a downtrend to be a downtrend, all right. So for a downtrend to be said to be confirmed, a lower high has to break a lower low. So this is important. For a downtrend to be confirmed, in some cases, or the smart money concept, they will tell you it needs to be broken twice. So when you have this first break here, they need it to be broken the second time before it can be confirmed to be a downtrend. So the opposite for an uptrend, a higher high needs to be broken by a higher low. Just follow me, because this is important. So this is a higher high, this is a higher low, this is a higher high. All right, let me just delete this. So for an uptrend to be called, or to be said we are in an uptrend, what needs to happen is the highs need to be taken out. If for any reason at this point, let me get this, sorry, yeah, if for any reason this high which you see here was not taken, and then the market kept on going downwards, we can only say that this was a retracement. And so until a resistance level, a previous resistance level is broken, we cannot say we are in an uptrend. So this is important for a downtrend to be confirmed. So we are done with the downtrend, so we're in an uptrend now. For an uptrend to be confirmed, a higher low, sorry, a higher low has to break a higher high. A higher low has to break a higher high. Sometimes these things can be confusing, but just get the point, and let's see how we can. So this is a higher high, a higher low, a higher high, a higher low, a higher high. Now, having established how the structure of an uptrend or a downtrend looks like, the next thing we need to understand is how a ranging market looks like. So for a ranging market, it's just making a straight line pattern without breaking any high, neither is it breaking any low. It's just fixed. All right, so you can probably screenshot this. What's happening? All right, so this is it. So let's go to our trading view. Now this we are on volatility 75. The first indicator we are going to be adding to enable us identify if we are in a downtrend or if we are in an uptrend. Now, nothing stops me from saying or teaching you guys how to just look at your chart and identify the market structure, but I just want to make it easy for you guys and all that. So example, like in this case, this low was broken, this low was broken, this low is currently not broken, so we have an existing downtrend at this point. Sorry, it's a little bit scattered. We have an existing downtrend, but let's just try to make it as easy as possible. All right, so let's go into it. So the first indicator we are going to be adding is the trended price oscillator. And how this indicator works is very, very wonderful. I'm going to show you how it works and how you can maximize it for your benefits. Okay, so let me make it obvious. Let's make our line. The input should be period 21, and then let's try making our line thicker. Then let's make our zero line. All right, so how this indicator works is this. Whenever price goes below the zero line at this point, you only look for sell positions. And then whenever price goes above, you look for buy positions and all that. So this is more like a trend confirmation indicator. All right, so let's go to the 5-minute time frame, because I want to use the 5-minute time frame for illustrations and all that. All right, so take a look at this, guys. From this point, please note this is a lagging indicator, but we are going to make it in such a way that it gives us sniper entry. So don't worry yourself, just stick with me to the end. All right, so from this point we can say we have VIX 75 in a downtrend. So having established that yes, we are in a downtrend of VIX 75, where can we take possible entries? Now, there are two ways, or there are three ways which I believe good entries can be taken. And let me show you something. So whenever DPO is in a downtrend, that is whenever price is below zero, whenever we have this zero line here, all we have to look out for is what? Sell opportunities. Okay, I'm going to use indicators also to teach you how to spot entries on it. I'm also going to teach you how to use technical analysis without indicator to show you how to spot entries. All right, okay, so let's finish with the indicator section, and then we'll come towards using technical analysis. So first things first, you need to use the multi-time frame analysis on this. And by multi-time frame analysis, your entry should be on 5 minutes, while your overall analysis should be on 1 hour and 30 minutes. So let's start with the 30 minutes time frame. So the first things first, if you want to use 4 hours for your analysis, you should use 30 minutes for your entry. And then if you want to use 1 hour for your analysis, you should use 15 minutes for your entry. It's more like going back 2 time frames. You start with 4 hours, you use 30 minutes, You start at 30 minutes, you skip 2, you use 5 minutes. You start with 5 minute time frame, you use 1 minute time frame for your entry. Right. So this also does apply to boom and crash. It works so much. Okay, so let's say we are looking at VIX 75 on 30 minutes. Now this is the point where we have the trended price oscillator, which is our indicator on this chart, telling us to what, take a sell at this point. Let me mark it. Yeah. So now take note of this level we have marked. All we have to do is go to 5 minute time frame or 15 minute time frame. This will really blow your minds, guys. And then mark out all the possible resistance and all the possible, okay, that this might be a little confusing, so this is just what I want you to do for me. The next indicator we are using is, sorry, not the Bollinger Bands. Well, let's leave the Bollinger Bands there. Just so I am sure that this class everyone can hear me. If you can hear me, please say I can hear you, and then if you can see my screen, say yes, I can see your screen, so that I go on. Can you? Yes, okay, all right, thank you. So let's move on.
Yeah,
So
I
the
can see your
next thing,
screen, but
yeah,
it's like it's a bit
it's a bit,
like I can't see the full screen. I don't know why.
okay, let me, is it clearer now?
It's clear, but I can't see the full thing. Like can't see like the full
Okay.
screen, like your full screen.
All right, let me just share the whole screen. Is it better now?
No,
It's gone.
It's still the same thing.
yeah, it's not. It doesn't show the whole chart.
Yeah.
Oh, I wish I can really understand, but is this something you can manage?
Of course.
Oh,
Yes, sir.
yeah, we can find it.
All right, sorry about that. For me, probably I'll use them next. All right, so now having identified that on 30 minutes we have price below the DPO, that's price going below the zero line, telling us to look for only sell opportunities. All you have to do is go to the 5 minute time frame to look for your sell entries. Now, let me just zoom out a little. Please note, this is where on the 30 minutes we were having our trend confirmation as being in a downtrend. So all you have to do is wait for Bollinger Band, sorry, for price to get to the top of the Bollinger Band, to the top, not this, to the top of the Bollinger Band, and then you can either mark it. I'm just trying to, let me add the final indicator. Good. Now, all you have to do is wait for price to get to the top Bollinger Band and then wait for a breakout to happen towards the downside for you to take a sell entry. Now, let me explain what I mean. On 30 minutes, once again, we have price. Let me go forward a bit. Yeah, so on 30 minutes, we have price below the zero line on DPO, and then on 5 minutes, we are looking at entries. Okay, so first things first, on 5 minute time frame, whenever price hits the top part of the Bollinger Band, all you have to wait is for DPO to cross below the zero line for you to take a sell trade. So let me show you what I mean. At this point, first let me mark where Bollinger Band was hit at the top. Yeah, so this is the point. Now, this is the first time price touched the top of the Bollinger Band. Now, why is this important? This is important because for you to take good sell entries, they need to be taken at a resistance. I'm not teaching other blocks or market structure. If not, probably, like I said, if the class is able to still go on for long, or we'll talk about that, but I'm just trying to use indicators so that we make it easy. Don't know why this is showing in my chat. All right, so now this is the first place we had price touch the Bollinger Band. All we have to do is wait for DPO to go below the zero line. Now, when DPO goes below the zero line, take a sell position, and let me show you this.
The screen is not showing, sir.
It's not showing.
Yes.
So at this point, price hits the top Bollinger Band. I believe it's showing now. Price hits the top Bollinger Band, and all you have to do is mark it. Probably you can hide that point. Now, after price has hit the top Bollinger Band, you are only waiting for DPO to go below the zero line. So the first rule first, keeping everything simple. On the 30 minutes time frame, which we did start our analysis from at this point, because at this point we had price going below the zero line on DPO. We are going to the 5 minutes. You can go to the 15 minutes, but I prefer 5 minutes so that our stop loss is a bit smaller. Now, on the 5-minute time frame, we all have to just wait for price to hit the Bollinger Band first, the top part of the Bollinger Band first, and then the next thing is for price to go below the zero line on your detrended price oscillator. And so at this point, you'll be taking a sell entry. So let me just, at this point, you'll be taking a sell entry, and let's see. And then all you have to do is target a 1:3. So let's take a short position here. So we are taking a short position here, and then your stop loss is above the previous swing high at this point, and then 1:3. So you can see that this was successfully hit. All right, keeping our stop loss above the previous swing high, above your line, which is above the Bollinger Band level. All right, above the Bollinger Band level, you're targeting 3 times what you risk, and you can see that this was a successful trade. Now, there are other variations to it. Let me still show you one more example. This is really exciting. I'm not a fan of indicator, but I started trading understanding how to play around indicators. So it's easy to combine market structure and indicators to kill the market. So now on 30 minutes, don't forget we have an established downtrend because of the fact that price is below the zero line on 30 minutes, and so we are only looking for entries on the 5-minute time frame. And so we established our first entry at this point, which was successful. Now the next point price hits the top Bollinger Band is at this point. Are you seeing this level? Yeah, so let's just hide our Bollinger Band, and then this is the point price hits the top Bollinger Band. All we have to do is confirm if DPO is still below the zero line. So in this case, yes, it is below the zero line, and then you take a sell trade again. So we take a short position from here, then stop loss above the previous. This was already almost a 1:7, but you can see how we easily got a 1:3 here. Okay, so having established that, this is the second trade that was good. Let's put up our Bollinger Band, and so you can see that price did not hit the top Bollinger Band again. Now, are you seeing where we had another opportunity? We had another opportunity at this point, but if you notice, so this is crazy, guys. If you notice at this point, or at this point where you had a possible sell signal, our DPO was above. Our DPO was above the zero line, indicating that we have a slight shift in market structure. This is really amazing because it helps you filter false trades. And so the sell position we would have taken here, we are not going to take it. And so even if we needed to wait for price to come below, look at where we got a sell entry, but our DPO did not confirm. We had another second sell entry here. Our DPO did not confirm. We had another one here, no confirmation. Let's see. Okay, finally we had one here, and you can see how this was good because price was already below our zero line for a possible sell signal. So let's hide this, and then so this is that place. Let me on my Bollinger Band so I'm sure where okay, here. So we are taking a sell signal after a bearish candle has been confirmed. More like let's hide this. All right, so you're taking a sell. Let me zoom in closely so that you can see this, and then let's put up our Bollinger Band. So this is where we are taking a sell from after price touched the tip of the Bollinger Band. Now note, at this point DPO was above the zero line, so you're not taking a sell signal. And now at this point DPO price hit the top of the Bollinger Band, and then price was below the zero line. So all you have to do is wait for that bearish candle to finish forming, and then you take a sell position. You can see how we are trading with the trend, still hitting key levels. So let's see, this 1:3. I think we got stopped out at this. Okay, no, we did not. Yeah, it hit our take profit. So 3 trades giving us 1:3. I mean, that's over 9% of our account has been made. So notwithstanding, always go back to the 30 minutes and figure out if price has gone above our DPO, please, because on the 30 minutes, when it goes above the zero line, you are now having a change in trend. So we can say VIX 75 is in an uptrend. All right, so let's go back to the 5 minutes. We'll keep wrecking the market on 5-minute time frame until the 30-minute time frame tells us that please, it's okay, stop taking sell positions. So let's put up our Bollinger Band. Now see the point where price hit the top part of the Bollinger Band. Okay, so now at this point, price was above the zero line DPO. Okay, so originally keeping rules or keeping our rules, in this case we will not take it. But if you notice price hits the Bollinger Band, and then when the reversal happens, it happens without price moving so much, you can take the trade. Example, let's look at that first example we looked at, because I know this is a question that some of you would have asked. You can see at this point where price hit the top part of the Bollinger Band, and then see where DPO crossed in the 5 minute time frame. It's not so much of a distance considering, but if price has already moved the long distance, don't take that trade because your stop loss is going to be high. But the best possible signals you're going to take is the when price hits the top part of the Bollinger Band and DPO is still below the zero line. Like I said, this class is being recorded, and so in case you missed the beginning point, you're going to have an opportunity to have the video. Okay, just a moment. All right, so let's look at for other opportunities. All right, so let's look at for other opportunities. So we just looked at sell positions. Give me any pair of your choice apart from boom and crash. Remember, today is for just volatilities. Any pair of your choice.
V100.
Volatility, the way you shouted it. It has VIX 100 been, has it been dealing with you? All right, so the VIX 100, is it the one that has S attached to it or
No, 100 regular.
All right, so VIX, we are here. VIX 100 as suggested, by you guys. Okay, so currently, let's identify the trend of VIX 100. It's in an uptrend because price is above the zero line. That is, the moving average of DPU is above the zero line. All right, so we'll go to 5 minute time frame to spot buying opportunities. Okay, so put up our Bollinger Band. All right. Wow. So now in this case, it becomes a challenge, and I'm going to explain something for you. Now, in such situations like this, you can see that price never got to the bottom part of the Bollinger Band for us to take entries. So this is where the concept of divergence comes in. I don't know if I can treat that. And that's using Williams percentage or RSI set at period 4. So okay, Williams percentage, there was no even entry because it has just been in an uptrend. But let's see, definitely we should get some entries. Well, I'm still, just remind me, I'm going to teach you how to take entries like this. But now for in our 30 minutes, we have an established uptrend from this point. So on 5 minutes, we need to see price touch the bottom part of the Bollinger Band while DPO is above zero. So at this point where it's touched, DPO was below. So none of this was a good entry. All right, so look at this one. Look at this particular one over here when price touched, and then let's see, this is where DPO cross. Now the distance between where you're going to place your buy position and the stop loss is far. So we are not going to take this particular trade. And look at this particular one. Let's see this. Okay, so the distance is also far. When DPO did break out, we had that distance. So now there is another thing you need to understand. The middle part of the Bollinger Band can act as entry, but I'm not discussing that. Let's just stick to our rule. So this is the only trade you would have taken because price hit the bottom part of the Bollinger Band, and we all we had to do is wait for our bullish candle to finish farming, and then you can see that price was not below the zero line, and so this is the first entry we would have taken. And then let's see if we did hit a 1:3 at this point. Let me be sure. Okay, here Bollinger Band at the peak. All right, so let's just, so price is below, and then let's see, this was already a 1:4. Let's assume we put our stop loss below this previous swing, we still did hit 1:3. Okay, so you can see how, as much as this has been in a major uptrend, we could still see how we were able to get an entry. Where it is usually nice is when we have wave-like structures, we can see multiple entries. Example, in situations like this, you would be looking out for divergence. Example, if we have a situation whereby on 30 minutes, this, okay, so this was not a valid divergence. Let me see if there were any good divergences we could spot. So this, so I couldn't even spot any divergence, but at this point where we had this entry, there was a divergence. I think, let me see, I'm not sure, but it looks like it's very hard to figure. This was facing up, while on our indicator window we had it facing down. So this was a slight divergence, adding to more like a hidden divergence because we are trading alongside the trend. Notwithstanding, if we wanted to use the concept of order block or market structure, we would have enjoyed some trades, break of structure. Okay, price didn't get back to this zone, and yeah, they were little structures. Let me see this break of the structure at this point. Okay, so I wouldn't consider this as a break of structure because if we look at this very well, it was the wick that broke. But whenever the candlestick wick breaks, let me zoom in, please. I'm just sorry, I'm digressing a little. Whenever the candlestick wick breaks a previous high, you wouldn't consider it as a proper break of structure. We need the body of the candle to break a previous structure, and then we can mark that zone as the order block whereby price is going to come back and then react from at this point. Although, so this is not a good break of structure for us to possibly take a buy signal at this point. Now we can say this is a good break of structure. That is the top part of the, if you are not uh good with market structure, don't worry, there will be a class for it. So now we have the body of this candle breaking this high, and so where did the move start from? The move started from here, right? And so this was another OB we can mark out. So what I do in my own case, I just mark out these levels, then wait for, sometimes I do extend it, right? Then I could also mark these level also. All right, so you can see how price did whatever it wanted to do and then came back to that level and then reacted of it. Well, let's go back to what we are focused on when we come towards price action. I'm going to really teach you guys a lot concerning that. So let's see, were there more opportunities? All right, so we have this at this point, but price was below the zero line, so no confirmation. And then note, please note this, it is very, very important. Whenever you have a retracement at the middle of the Bollinger Band and then there is a divergence back in it, take the trade, because most times you can see this would have been a good trade on the 5-minute time frame if price did come back to the bottom of the Bollinger Band, but we did not see price get back. So are we saying we are going to miss all these beautiful trades? No. What you can do is, if price reacts at the middle of the Bollinger Band and you could spot a divergence, example, let's look at these two examples, 1, 2, and then on the indicator window 1, 2. So this is not a divergence, but let me show you guys this one. Take a look at the next one, 1, 2. All right, and so let me delete this first one that wasn't a divergence. Let me delete this first one. All right, so you can see a hidden divergence clearly spotted in this situation. So whenever, two ways you can take trades: price hitting the bottom part of the Bollinger Band and it's already DPO is above the zero line, good confirmation to take a trade. But if it reacts at the middle part of the Bollinger Band, all you have to do is there a divergence backing it up, and then you wait for your bullish candle to finish forming, and then you target your 1:3. All right, so you put your stop loss below and then target 1:3. We have it. All right, so we only had two good buy opportunities. Meanwhile, in this case, since it's a major uptrend, you would have really enjoyed a lot of opportunities. Time wouldn't permit me. If not, I would have showed you guys how to also enjoy trades like this, and then you wait for, this was more like a breaker block whereby price is reacting to this level, and then so this is going to probably be so much, but let's just stick with what we have. Okay, so someone else should give me another pair. Let's use as a case study. So currently on VIX 100, if you want to take an or if you want to take a buy signal, you need to wait for price. Now, the reason I'm saying wait for price to get at key levels, it's just to help you. It's not like I personally, there is something I want to derive from it, because if you're taking buy opportunities when price is hitting the top part of the Bollinger Band, you are setting up yourself for losses, because those are points whereby the markets can be reversing against you. And so you want to take entries whereby you have a better opportunity to have a good risk to reward and then enjoy life. So probably someone should give me another pair. Let's use as an example. And there is something I need to teach you guys before you give me another pair. Now note, whenever, remember on the 30 minutes time frame, we are still bullish. So this is what you can do for me. Whenever price hits the bottom Bollinger Band, you can mark those levels. Because price might come back to those levels. So it is really exciting. It's really exciting. So see this level, remember on the sometimes you can mark the middle if it's very obvious, but okay, see this level. Now let's switch off our Bollinger Band. Now take a look at this level. This particular level was broken. Now look at this particular level. You can see how price came back to it. reacted, and boom, went upwards. Look at this level, previous level, and how price reacted. Look at this level, you can see how price reacted and all that and all that. So it's just little secrets added to the Bollinger Band, combining it with price action. So someone else should give me another pair. It's, see, this works on boom and crash, but I really don't want to touch it on boom and crash. Let's just play around VIX. All right, let's enjoy ourselves with VIX today. So give me another pair.
Step index.
Yes, I was waiting for someone to mention step index. All right, let's go to 30 minutes. So this is more like we are doing it live, and then I just hope probably we see an opportunity that we can take together. All right, so on step index, what do we have? Now, if I'm going to use this as a strategy to always get into the market, I'm going to first look at 30 minutes DPO above the zero line. All right, so let's mark it. So DPO above the zero line at this point. All right, so we are gonna go to the 5 minute time frame, put up our Bollinger Band. All right, so all we have to wait for is price to get to the bottom part of the Bollinger Band, and then we take a buy signal. So right now, no opportunity, but let's look for previous examples where we had some good opportunities to kill the market. All right, so let's take a look at this example from this point. I think this was probably yesterday to this point. So our analysis is going to end here. Anything concerning an uptrend ends here. On step index anyway, I'm just trying to show you guys something. Okay, so let's go to the 5 minute time frame. Please note, on that 30 minutes, we did establish that price is above the DPO, and so we are only looking for buy opportunities. All right, so good. Now, this is the first level price did hit the bottom part of the Bollinger Band, but notice price was down below our DPO, signifying we have a slight shift in downtrend. We'll do the part two of this section, because in the part two of the section you'll still be able to take such trades. Why? Because of price action, in the sense that if we have a breakout at this point, we can obviously mark the order block from this point. So this is the last bullish candle. Yeah, this is the last bearish candle before the bullish move. And so if I'm going to refine this, it means I have to go back to the 1 minute time frame, because this was quite big. But notwithstanding, we can also mark this level, and so we would have taken this trade, buy trade. And also note, there was a divergence from this level to this level, from this level to this level. I just digressed a little to show you the importance of price action. Is most times actually much more effective than indicators. But notwithstanding, it's good you have the two arsenal at your disposal. So let's put up our Bollinger Band again. On the 5 minutes, we could see price hitting the bottom part of the Bollinger Band. And so in my own case, being the fact that I am well experienced, I may have also taken this trade. Remember, I also did say that whenever price hits the bottom part of the Bollinger Band, always mark those zones, because price can come back to return trade. All right, but let's stick to the rules. So at this point, price did hit the bottom part of the Bollinger Band. Was there a divergence? Yes, there was a divergence. So let me remove the other, let me remove this. So in cases whereby you do not have DPO confirming for you to take a buy trade, probably you can just spot out divergences and then enjoy yourself. So this and this, is this not spiritual, guys? All right, so these are regular divergences because we are trading against the trend. All right, so we had price hitting the bottom part of the Bollinger Band at this point, and so naturally we wouldn't have taken the trade. Why? Because DPO is below the zero line. But since we were able to figure out the divergence of this point, we were able to take the trade. Now, the second time that price did hit the bottom part of the Bollinger Band, please do not forget, on the 30-minute time frame, we have an established uptrend. So we are only looking for buy opportunities. All right. So this is the second time. Okay, the third time price did touch. Okay, it did not really touch the bottom part of the Bollinger Band. So probably we would have not taken this trade. Let's stick to the rules. So we have an opportunity here, price touching the bottom part of the Bollinger Band, and yes, this is the signal we are looking out for. You can see DPO above the zero line or crossing above the zero line, although this was not a perfect touch, but I think it was just missed by a few pips. I think it was just missed by a few pips. So here, and then wait for our bullish confirmation and then take the trade. This was mad. So let's reduce. Yeah, it was almost a 1:7, but let's stick with our 1:3. There's no need to chase. We don't know if the market would have gotten there when taking the trade live. So 1:3 was nicely and beautifully achieved. There was also no divergence back in this trade. I mean, this is $1 million insight. All right, so we have another opportunity here. DPO was above. Excuse me. I mean, guys, this is beautiful. Although this was not so perfect, but well, I would have taken it after having this bullish confirmation. So this was another good 1:3. I mean, the win rate for this strategy is pretty high. It's really good, and it's something you can use in your phone. Okay, since you guys do not have the trended price oscillator, you can use on your phone, you can use RSI period 50 and then add, is it a zero line or a 50 line? I'll figure that out so that it's more likened to the DPO so that you can have it on your phone. Okay, so this was another good trade. I mean, this is really good. So we have this point now. Okay, so at this point we have price hitting the bottom part of the Bollinger Band, but we can see DPO is below. Do we have a divergence? Do we have a divergence? This is quite a distance. Okay, so let me shape this. Price hitting the bottom part of the Bollinger Band. So this is where we had our bullish confirmation. Our bullish confirmation was below. Excuse me. Our bullish confirmation was below DPO. So this wasn't a good opportunity, but notwithstanding, okay, so this was not a good opportunity because even the divergence was not so good. Its price was still falling. So this wasn't good. So this is the another N3. Now let's look at this. Was there a divergence? Yes, there was. So this didn't hit our 1:3 by bare looking at it. So let's assume this was a loss. All right, so we have this. Okay, no divergence because this was facing downward and our DP was facing downward. So we have another opportunity here. So yes, we had the divergence in the sense that let's mark this 1 2. All right, so this was a good trade. Take a buy signal at this point, target 1:3. So it's not like you're not going to have losses. Obviously you will, but the win rate is mad, as well as the risk to reward for this strategy. Please remember it's 1:3, not even 1:2. In most cases you can even do past that. So let's see, we have another instance here. Was there a divergence from here to here? So even from this point to this point, so no divergence, because from this point to this point is facing downwards and our DPU is facing downwards. So even if we did draw from this point to this point, it's facing upward and our DPU is facing upward, so no signal. All right, look at this particular one. So this didn't really touch, but notwithstanding, this was one of those trades because price was above the zero line. Target 1:3. Stop loss above the previous candle. So this hit our target after a series of ranging. I mean, guys, this is good. So this is we had multiple opportunities. We have another one here. Yeah, we have another one here. Okay, this candle was so long, so I wouldn't take it because our stop loss would be far, except was there a divergence back in it? Not really. All right, so we had another one here, but price was below, and yes, there was a divergence backing up the trade, so we can take this. We had this facing upward, then so whenever divergence only comes in whenever you are getting a buy entry and price on the DPO is not confirming, that's where you can now try spotting out divergence. And this was another mad 1:3. Now this is the perfect example we are always looking out for. Sorry. I've missed where we stopped. Okay, so this is where price got to the bottom part of the Bollinger Band, and yes, DPO was above the zero line, so you can see how perfect this was. All right, so we have another opportunity here. I mean, this was also good, 1:3. We have another one here. Now, in this case, price was below and there was no divergence because drawing from this point to this point is facing downward, even from this point to this point, facing downward. Now we have another opportunity here, and yes, there was a divergence. Man, this is really amazing. I didn't even expect the class to have this. Was there? Yes, so there was. So, man, this was good. So in this case, now when we got this bullish confirmation at this point, let me see. The price was below and there was no divergence. So from here downwards up to this point, there was no divergence. So you can see how effective this is. Use it. Probably I'm going to do the part of this video, and it's going to be, if the part one can be this wonderful, imagine how part two is going to be. So guys, I just felt like sharing some few secrets with you guys, and I'm going to drop the video on the channel in case you missed joining from the beginning. I just felt like, okay, let's have fun trying to share some knowledge together. All right, so we have looked at 3 pairs, and let's call it a night. But basically, I do not use indicators. If I want to use indicators, probably just to confirm entries and all that. So any slight question before we call it a day? Please, if you want to kill boom and crash with this, maybe you should go for the part 2 because it is so wicked on boom and crash. If you see the results, you feel like, sir, I think I have to leave the channel. But anyway, that's just it. So
Let's try it out on 1000, sir.
you're forcing me. Anguma. All right, so let's try that. Right, let's try that on boom 1000. Boom 1000. Okay. It's so amazing because of how so let's put our DPO. You shall see with your eyes how effective this is in 1000. All right, so our Bollinger Band, where are you? You just don't have conscience. You want to wreck these people. All right, so first things first, this was where we have boom 1000 on a downtrend. So let's mark. Remember, there's nothing you do without marking. So it's just more like a guide. So we have it here. Let me go back a little. We have it here. So in this case now, you go to the 5-minute time frame. And let's see the magic. So we had the first opportunity was at this point on the 5-minute time frame. Now, in cases like this, please, you need to be careful because this is spikes. What our advice is do analysis because 5 minutes do not really give good clarity because of it's just like you're analyzing on 1 minute. I don't see any difference between 5 minutes and 1 minute. We just want a situation whereby our chart is full. Okay, so but no problem, let's just do the 5 minutes in the meantime. So you only look for opportunities when price hits the top part of the Bollinger Band. I don't think, let's assume this did hit. All I would be looking for was there a divergence. I don't think so. So you can see, in as much as this did not hit, but you can see that this was good. This we did not touch, but this was also good because now when this one was there, price was already getting below the zero line. So you're only going to be looking out for sell opportunities at this point. This is another one. So we finally had price hitting the top part of the Bollinger Band, and then when we got our bearish confirmation, though price was above the zero line, so it's risky to take a trade. But let me show you what I personally will do. If I want to do this, I'm going to use the 15 minutes. Yeah, I'm going to use the 15 minutes because the 15 minutes gives you a clear market structure, and this is an example of where you would have taken a trade. Okay, so let's sorry, this is an example of where you would have taken a trade, and yes, there was a divergence at this point, a very tiny little divergence, but it was worth spotting. We have this and we have this, and price was already getting below the zero line at this point where we could take in our sell signal. Whenever the bearish confirmation kind of finished forming, we could see that it formed below when price was, so this was 15 15 15, good move towards the downside. All right, so let's put up our Bollinger Band. You can see price is below the Bollinger Band, so possibly spikes going to happen and then get to this point again, and then you're going to look for sell opportunities. All right, so let's go to our 30-minute time frame and then look at more examples. Since you brought me to boom and crash, let's finally deal with it. All right, so now this is your sell position points. Let's look at buy positions from this point, and then the buy, sorry, the buy whatever stopped here basically. All right, so let's just go to the 15-minute time frame. It's very, very small. Okay, so this is the only point where, let me see. I hope I'm doing it correctly. All right, so it's correct. Right, so this is the only point where we had price getting to the bottom part of the Bollinger Band. Let's look at 5 minutes. Though there was a spike, that was really a good one, but let's see 5 minutes. Okay, so now look at 5 minutes time frame. Price getting to the bottom part of the Bollinger Band, but in this case you wait for, that is why I'm saying 5 minutes I wouldn't really recommend, because you can see the spike that did happen. Yes, when the spike happened, price was already above the zero line, which is good confirmation. But now your stop loss, considering your stop loss, it's going to be below the spike. Now another thing you can do is, sir, what if price is getting to the bottom part of the Bollinger Band? Can we just place a buy limit? Yes, that can work, but it may not. I always like my confirmation candle. If I want to take a buy, a bullish confirmation candle has to show, because if you want to do that, in such cases like this, you are going to be placing buy trades, buy trades, buy trades, because price is already hitting the bottom Bollinger Band, and so you stand a chance to risk your account. So you can still wait for a spike to occur, confirming that yes, we are going bullish, and then take the trade. So this is the only possible trade. Although it was good 555, good 5-3 spikes, yeah, this was good notwithstanding. And then on that 15 minutes, which I prefer to take my entries on boom and crash, let me show you. So this was where price got to the bottom Bollinger Band, and then this was where we had our bullish confirmation. Now at this point where we had this bullish confirmation, note price was below the zero line, and so since price is below the zero line, if there was a divergence, this would have been a confirmation for a buy, but I couldn't spot any divergence. And let's see, assuming there was a divergence, a buy, and then stop loss, so this was a 1:3, which would have been good, but there was no opportunity. We could only have enjoyed sell opportunities at this point. So basically this occurs when the market is usually ranging, and even when it is ranging, yeah, you can still get some good opportunities, some good signals. Let's look at crash 500. We have already entered that boom or crash, so let's just play around with it. So on 30-minute time frame, let's put up our Bollinger Band. Whoa, this is going to be mad. So we have price at this point below the DPO. You are going to see a lot of magic, and then this is the first time finally, anyway, I'm on a buy on this trade. Took it this point. So from this point to this point, I mean, I cannot wait to show you guys how many opportunities you have gotten. All right, so sorry, I'm going to the 10 minutes. Wow. This is well low. So this is the first time price got to the top part of the Bollinger Band. Price was below. Boom, money. Let's keep 1:3 was hit here. Sorry, this was a short position. Price, we had our bearish confirmation here. Okay, so we did hit a 1:3. Let's look for another opportunity. Now this is another opportunity. price was below, plus above. This was another good one, ratio 3. This was another point. Was there a divergence? Trying to, sorry if you cannot see. Okay, no divergence here. All right, let's look at this. Price did not touch. All right, so let's ignore that one. But on 5 minute time frame, this 10 minutes, you would be amazed at what you're going to see on. So this is another point. Price did hit the top part of the Bollinger Band and price was below. Man, how did I not see all this? Wow. So this was another one, ratio 3. You said we should come to boom and crash. I was avoiding it. Okay, we had another opportunity here. Aisha, I'm going to upload this. All right. 4 good opportunities, no single loss. 1 ratio 3 kept on being hit. Okay, so we got, so you could see price that has not gotten to the top part of the Bollinger Band. So yeah, we had price getting to the top part of the Bollinger Band. Was there a divergence? This would have been a sweet trade, but I don't think there was a divergence because this was facing downwards and our DP was facing downwards. And so we now have price on the 30 minutes above. So let's look at the 5 minute time frame, since that's what basically almost everyone has got on their phone. But remember, like I said, 5 minutes is as if I'm looking at 1 minute. It's the structures are not so clear. So blessed are those who were awake to be a part of this class. Sorry, I don't know. It's trading is giving me headache. I'm trying to navigate. So what's go back? Okay. All right. So on 5 minute time frame, guys, here we are. So this was where on that 30-minute time frame we had our sell confirmation. So look at this.
Is anyone here? Hello?